back to another episode of Beyond Connections, your bi-weekly session for us, the analysts of capital security and MyTrade Philippines, to be able to answer your burning questions about the stock market.
Hello mga ka-MyTrade! Welcome to this year's Midyear Market Outlook. My name is Cadis, the online business head here at MyTrade, and I will be your host for this afternoon. Grabe no, 6 months into 2025, and a lot has already happened in the stock market. After the rate cuts, Trump administration, and other economic indicators that have shaken up the charts, what can we expect for the next few months, and paano ba natin dapat iposisyon ng ating mga portfolio? Now, I know you're all thrilled to hear answers from our guests this afternoon. But before that, kamustahin muna natin kayo dito sa ating comment section. No? I have here Joseph Poblete saying hello from Ortigas City. Hello, Joseph. And if you're here watching us for the first time, please join us here in the comment section. Just say where you're watching us from, and then maybe we can do a shout out for you later on. But actually, for this year's market outlook, kung napansin nyo, normally we do have our own specific themes for every market outlook. Earlier this year, we said our theme was glass half full, and that's where we're coming from. But would you be able to guess our theme for the rest of the year for this market outlook that we're having this afternoon? And syempre, hindi ko naman kayo pababayaan ng walang clue. So, I will give you a few clues, and kung sino yung makakaguess ng theme natin para sa ngayong hapon ay merong prize, of course. So, can I just ask the team to please show our clues? I will only give you 3 clues, ha? So, habang ina-up ng team ang ating slides, let me just see kung sino ang mga nanonood sa atin. Sabi ni Ms. Tess Santos, hello from Abu Dhabi. And Bongit, sabi niya, watching from Papua New Guinea. Welcome to the MyTrade Midyear Market Outlook. But as I mentioned, for today, you are going to play Guess the Theme for this afternoon's MyTrade Market Outlook. So our first clue, please share the slide, team. Clue number 1. Okay, this 5-word theme shares a title with a multi-awarded film that bends time, space, and laundry. So, giveaway na yung laundry, guys, ha? But it's a 5-word theme. Ibig sabihin, hindi lang iisang word ito. It's a group of words at multi-awarded film siya that bends time, space, and laundry. That's our title, our theme for this afternoon. That's clue number 1. And let's proceed with clue number 2. No. All right. So while we're waiting for that, okay, clue number 2 is right here. It's not a bull, not a bear. It's a chaotic mix of signals, like living in multiple market realities all at once. Oh, ayan na, may mga words na naka-highlight. So hopefully napanood nyo to at mag-guess ninyo ang clue. But habang nag-iisip kayo, babati muna ako dito sa comment section natin. I have here Memento Ne from Cebu. Hello. Mayong hapon galing sa Manila. And I have here Arnel Boy. Hello, Arnel. Rans Realtor, one of our suki sa ating mga live. Hello, Rans. And I also have here Ryan Cesar Barcelona. Good afternoon po sa inyo. And Kaloy Albano. All right. So, Lucy Abog watching from Taiwan. Hello po. Magandang hapon sa inyo. All right. This is clue number 2. And now, we will proceed with clue number 3 kasi I think meron na tayong winner. But para dun sa mga hindi pa nakaka-guess, ito ang ating final clue. Slide number 3, from rate cuts to oil price hikes to geopolitical tensions, it's not just one trend. It's everything happening everywhere, all at the same time. And yes, if you have guessed everything, everywhere, all at once, yan ang ating theme for this afternoon. So, ang nakahula is si Memento Ne, sabi niya, everything, everywhere, all at once. And si Kizde R25, pa-educate na lang po ako kung paano ba ipapronounce ito. Pero tama rin ang hula niya, everything, everywhere, all at once. And si Chel A, everything, everywhere, all at once. And yes, that's our theme for this afternoon. And for those who got it right, please don't forget to send us a message with your details. Just type in your contact details and your client code so that our team will be able to assist you with your prizes. Kasi itong everything, everywhere, all at once, I'm sure lahat tayo naramdaman natin nito with all of the things that we've been experiencing all together, all at once the past 6 months. And kanina na-mention natin yung ibang mga catalyst. But of course, you are here to listen to our experts, and they will be the ones to guide us in how to approach the next half of 2025. But before we proceed with the main events, let me just remind you, if you still haven't registered to become a part of the MyTrade PH community, hindi pa huli ang lahat, just go to start.mytrade.com.ph to create your very own MyTrade PH accounts. If you are joining us here for the first time and hindi pa kayo part ng MyTrade community, please sign up for an account and you will get more benefits, more events like this in the future. So we have more treats and exclusive insights when you join the MyTrade PH fam. But now we will proceed sa exciting part. I know you guys are all excited to hear from our guests. And with that, I won't keep you waiting any longer. So to kick things off, our first speaker has over 20 years of experience in the field of technical analysis and is known as the Philippines' first chartered market technician. He accurately predicted the October 2008 market crash and the market bottom in March 2020. His technical insights are also seen in his weekly reports of Abacus Super Timer, but today he is here to join us live. And with that, let us all welcome Abacus Securities Technical Analyst, Mr. Lawrence Gonzaga, here on the floor. Hi, Sir Lawrence.
Hi.
Hello.
Hi.
Good afternoon, sir. So, ready na po kami to hear your insights. You have the floor, sir.
Yes. First slide, please. Next slide. Here we have the long-term chart of the PSEI. As you can see, for the past few years, we have seen a generally sideways trend with resistance near the 7604 and 7892 levels, while the support is at 6204 and 5804. So this is generally a trading range. So what we try to do is to buy low and try to sell high. And this has been going on since the year 2020. Next slide. Then we dive into the daily chart of the PSEI. We have resistance near 6473 and 6550, while supports are at 6183 and 6087. We are currently watching the 50-day moving average line at 6341. The market closed slightly above that level today. This is for me a make or break level for the short term. But if the market rallies further, we see resistance near the 200-day moving average line at 6572. This is an overhang. Next. We run some screen and this is what we got. We search for stocks with a minimum 25 million daily traded volume, and it must be above the 50-day and also above the 200-day moving average line. So we have these stocks on the screen right now. Some are bigger than the others. The bigger ones are ICT, URC, DG Plus, Meralco, and we also have some smaller stocks like PhilWeb. Next slide. We have the chart of AC. This is generally a sideways market and it's near the lower end of the range. Resistance is at around 566.50, while support there's one at 540.5. Next slide. One stock that I've been looking at right now is ASEN. We have a recent low at 239 and a rally above 260 may signal a reversal. Today we saw a reversal with a breakout above 260. So I think it's okay to add ASEN. Next slide. For Ali, we have a breakout above 2570. Next resistance levels are at 2615, 2670, and 2715. And today we saw Ali being quite active. And in fact, it closed at 27 pesos today. Next. Then we go to Bloom. There's resistance at 573 and 631. And the stock has been correcting since it reached a recent high of 653. We see supports at 508 and 495. The daily MACD has crossed down, so this stock may be under pressure in the near term. Next. Then we have Globe. This is one stock that we are not too keen on based on the current technical picture. The stock has been making new lows and is also below the 50 and 200-day moving average line. So we can say that Globe is currently in a downtrend. Unless we see a strong rally above the 10-day moving average line, above 1704. The next slide. Then we go to GT Cup. It peaked recently at 609 and it has pulled back a little bit. So we may see GT Cup going sideways in the near term with support at 531. But it could find support also a little bit higher than that. Next. Then we go to ICT. This has been one of the more active big caps. And there's usually some trading range that we can play around. Today, ICT went down to 411. We see upside. We see a bounce back to around 418, 420. Next. JG Summit. This could be a stock that is trying to make a recovery. Although the 50-day moving average line has yet to catch that 50-day, that 50-day has yet to cross above the 200-day, but it's going sideways after being in a downtrend for a long, long while. So this could be something worth buying on pullbacks. Next, MWC breakout point is 3960. So far, the chart looks okay. It's trading above the 50-day and also above the 200-day moving average line. So these stocks should generally trend higher. Next, Pure Gold. Pure Gold is one of the more resilient stocks and is now above the 3550 breakout point. Next resistance is at 3650 and 3785. Next. Then we go to SM. It's currently sideways, but above 50-day and above 200-day. So we see resistance near 918 and 965. Next, SM Prime. I think there's a good bottom near 2170, but the immediate resistance is at 2370. After that, there's another one at 2555. But we can see that SM Prime is near the lower end of its trading range. Next, URC. It has rallied and afterwards it has moved sideways. The There's typo error here. This should be some of their figures. We'll just update that. But for the resistance, we we see resistance at 9350. That should be the breakout point for URC. If ever it breaks 9350, we may see the stock rallying to around 97 or around 100 pesos. Next, or yan, that's it from my end. Thank you. Let's hear from Nikki.
All right. Thank you for those insights, Sir Lawrence. There's a lot to unpack here, but we will get to the questions for you later on, sir. And yes, habang pa-exit kayo, Sir Lawrence, you're also introducing Sir Nicky, and you're right. That's our next segment already. So, but Sir Lawrence, please don't leave us yet. We'll see you later for the Q&A. Bye, sir, for now. All right. So, uh, in-anticipate na ni Sir Lawrence, of course, yung next part ng ating program. But before we proceed to Sir Nicky's market outlook, let me just take a look at our comment section here. And let's take a few shout outs from our audience. So, I have here Jay Iglesia watching from Taguig. Magandang hapon. Magandang maulan na hapon. And then also, Justin Ancheta watching from Naga City. So even if it's raining outside, it will be raining insights here for our market outlook event. And although we'll be seeing Sir Lawrence later on, we will be proceeding with the meat of the event for this afternoon. Now, to complement the technical perspective that was given to us by Sir Lawrence, it's time we turn to some fundamental insights to help complete the picture for our mid-year market outlook. Now, up next, we're honored to hear from the head of research of Abacus Securities, who has also been recognized by Forbes as one of Asia's best stock pickers, to share his fundamental outlook for the rest of 2025. Let's welcome Mr. Nicky Franco. All right. Hi, Sir Nicky. Magandang
Hello,
hapon.
Kadis. Thank you for the intro. Good afternoon, everyone.
All right, sir. The floor is yours.
Okay, thank you. Hey, again, good afternoon, everyone. And as revealed earlier, the title of our presentation is Everything Everywhere All at Once. And this really refers to how Trump, despite being in office just 5.5 months, has had a huge role in shaping financial markets now. He has been touching everything. He has been, or his impact has been everywhere, no? From trade to fiscal, from tariffs and trade to fiscal and monetary policy, oil and renewable energy, and so on and so forth. Now, um, this is likely to be the case over the remainder of his term, which will be for another 3.5 years. So investors, in our view, will have to live with the volatility and uncertainty going forward. And by the way, before we continue, I'll try to run through the slides as quickly as possible so that we have more time for the Q&A later. So going to the next slide, let's just touch on the various factors that we believe will be very significant over the next 12 months. So with regard to US monetary policy, it is still 10.5 months until Powell's term ends, but already one or two betting favorites have emerged from potential candidates. I think one of the candidates is Mr. Hassett, who is actually already in the cabinet of President Trump. Also, current Fed Governor Waller. Both have expressed views similar to Trump that interest rates should be lower. Now, Trump himself has said that interest rates should be 2% lower than they are. And he even joked maybe a few weeks ago about appointing himself as Fed chair. Now, this, of course, will be negative for the Fed, negative for financial markets, because it would be viewed as an erosion of central bank independence. So markets have already reacted, pushing the US dollar to a 3-year low, as you can see in this chart. Further depreciation is likely, and if you look at the Bloomberg Dollar Index, might fall to the previous low, 2021 low of 90, which should be positive for the Philippine peso. Moving on to tariffs, as you can see here, the VIX index really jumped in April in the aftermath of the Liberation Day tariffs that Trump announced April 2. However, since then, fears have largely receded. It's back to normal levels. This is because of several factors, including the fact that tariffs haven't showed up yet in US inflation. China's exports have actually continued to reach record highs. And as you've probably heard of this one, the so-called taco trade, meaning that Trump always chickens out with regard to tariffs and other matters now. However, or on top of this, there have been zero trade agreements actually in the past 3 months now, since the Liberation Day tariffs or reciprocal tariffs were suspended. So there's also some positivity that these will be delayed further past July 9. Risk sentiment has also been supported by news of so-called imminent deals, and there's also been distraction with regard to the One Big Beautiful Bill, which I think last night or the other night was passed in the Senate, or moved along in the US Senate. Moving now to earnings, this is one of the negatives now for the first half of the year. As you can see in this chart, the consensus nominal EPS for the PSEI has dropped 5% year to date, and this is one of the worst years since at least 2007. Of course, we excluded the year 2020, which would have skewed the data. Meanwhile, we've discussed before in our daily reports that the first quarter weighted average EPS growth in the first quarter was quite tepid, no? At less than 7% year on year. And it was even slower for the non-index universe at less than 5%. Actually, if you remove DigiPlus from the calculations, no, for the non-index universe, the year-on-year growth for the non-index universe would be negative 2%. Meanwhile, of the 50 firms with at least two estimates in our universe, 74% have seen negative revisions from the end of Q1. So we don't believe that the second quarter will be much better, and this will probably continue into the third and fourth quarters. However, the outlook brightens after 2025. We will show later that there are a good number of companies that are expected to report compounded annual growth rates in terms of EPS of more than 8% each from 2024 to 2026. Moving to the exchange rate, what we want to show here is that a couple of things. Now, first, the Trump administration wants a weaker dollar to reduce the trade deficit and boost manufacturing. And that is also one of the reasons why the dollar index has reached a 4-year low or more than 4-year low. The choice of the next Fed chairman will also be revealing, as I mentioned earlier. The next Fed chair will probably be supportive of Trump's rate cuts. Trump actually said a few days ago that the candidates that he is the candidates that he is looking at will all be supportive of a rate cut. So again, this will be positive for the peso, which in our view is a net positive for the economy and for equities, notwithstanding the negative impact on exporters and families who receive remittances from relatives abroad. However, the appreciation will still be tempered because foreign direct investments have been weak, and we expect that the current account deficit will continue to be quite negative. So overall, again, the peso's appreciation should be positive. This is especially for airlines, consumer companies, and for those with significant dollar debts. On the economy, also one of the negatives now for the past 6 months, and actually since the third quarter of last year, growth has missed expectations by a wide margin each time now for the last 3 quarters. Signs point to weaker growth again in the second quarter. This is based on a drop in energy demand for the second quarter. Based on WESM data, the quarter to date energy demand is down 3% year on year for the Luzon Visayas grid, a complete reversal from the positive 3% in the first quarter. We've also seen softer car sales, slower tourism arrivals, and a slowdown as well in bank lending. On the positive side, consumers remain resilient. The merchandise trade deficit has shrunk, and I think there's more activity with regard to services as well. Moving on to valuations, and I have quite a number of charts for this one. We've mentioned before during our January market outlook that valuations for the PSEI can hardly get any cheaper. Now, so at that time, the market was trading at about 10 times PE, It is still around 10 times PE today. I think it went down at one point. It was down to 9 times PE. But generally speaking, we've been correct in saying that the market's valuations have little downside remaining. So with that, we want to show here that the Philippines is the cheapest in ASEAN, which are the dark green bars in this chart. The Philippines is also in the bottom quartile of all emerging market indices. Sorry. We can see in this chart that the earnings yield gap is near a record. It has been scarcely wider than it is now. And then in this chart, you can see that foreign flows are very much correlated to the premium and or discount that Philippine equities have over other emerging markets. So it's the lack of foreign money, the lack of foreign inflows really that has been driving the PSEI's discount versus emerging markets. And so without the return of hot money, and we don't think that foreign investors will return to the Philippines soon. Without hot money, the PSEI is going to be dependent on earnings growth moving forward, which unfortunately, as mentioned earlier, is also in the doldrums, so to speak, given the weak performance of earnings in the first quarter and the fact that we don't see significant improvement over the balance of the year. And then speaking of hot money, you can see here there's really little interest on the part of foreign investors. You can see here the value turnover for the Philippine ETF that's listed in the US, FA. And the gold line there is the 50-day moving average based on Bloomberg data. As you can see, it's quite near the bottom end of the range, and volumes have really been below what they were during the 2010s. We also want to say here that there's a very strong correlation between cumulative net foreign buying, net foreign selling versus the premier discount to EMs, which we discussed earlier. But there is a moderate or looser correlation between cumulative net foreign buying and selling with the PSEI itself. Now, the dearth of interest from foreign investors is due to because of how small the market is, relatively poor liquidity, negligible weight in the EM index, especially now. We're less than 1% of the EM index, and Philippines is also has the smallest weight in the MSCI ASEAN index at about 6%. And then, unfortunately, one thing to show here, there's still a lot of potential outflows. You can see that the value of the foreign free float for most of the stocks are represented here now, but really huge amounts for SM, ICT, BDO, SM Prime, and Ali. So these are the ones that could be vulnerable to further sell-offs from foreign investors. Moving on to Philippine monetary policy, the BSP came out today with a statement saying that they expect inflation to be from 1.1% to 1.9% for the month of June. At the midpoint of this range, that would represent very small blip for June. However, in our view, inflation will remain benign through the balance of this year and possibly even through first quarter of next year. Meanwhile, officials, including Governor Remolona, have signaled just one more rate cut for the balance of the year. But we believe that this is going to change um, with incoming data. Specifically, we expect another miss in terms of GDP growth, and we expect or we foresee that the BSP will have significantly more policy space moving forward, given interest rate futures in the US. Now, as you can see in this chart, if Bloomberg data is correct now with regard to future interest rate cuts in the US, and even if the BSP cuts 2 more times this year, the differential between the BSP's policy rate and that of the Fed's, even if it is on the upper bound, will be about 150 basis points. This is double the 75 basis points that we have seen recently. A weaker dollar should also give the BSP further policy space, and so we maintain our view of 2 more rate cuts for the balance of this year, and these we expect will be in October and December. And in our view, there is still going to be some scope to reduce rates going into next year, given the factors that I have mentioned. With regard to liquidity, actually, there's some good news on this front. The average daily value turnover over the past 30 days has reached 6.1 billion. This is on par or at par with pre-COVID levels of 6 billion. 6 billion was the average daily value turnover from July 2018 to end 2019. Unfortunately, on an individual stock basis, the average daily value turnover for many stocks are much lower. Actually, I think more than a third of the stocks in our universe saw declines in terms of liquidity in excess of 40% or even 50% compared to pre-pandemic levels. What has happened is that even though total liquidity has returned to pre-pandemic levels, the concentration of the flows has been much greater. No? So the top 15 companies in terms of average daily value turnover today, for example, account for a significantly bigger chunk of the total compared to 2018 or 2019 levels. If my memory serves me right, the top 15 liquid companies today account for about 70% of total average daily, the average value daily value turnover for the market as a whole, compared to about 60% pre-COVID. Meanwhile, the rotation from fixed income to equities hasn't happened yet. During our market outlook at the start of the year, what we actually said that was that we expect this to happen sometime in the third quarter of this year. So it's not yet too late. It's possible that this could be delayed to the fourth quarter because the rate cutting cycle of the BSP was also delayed. Remember, there was 1 month when everyone was expecting a rate cut, but then the BSP decided to hold off because of the volatility arising from Trump's actions. Now, so the rotation that we were expecting might be delayed to the fourth quarter. Meanwhile, external issues, of course, affecting the Philippines and other emerging markets. As I mentioned earlier, it's one of the reasons why foreign investors continue to turn away from the Philippines. Meanwhile, we don't believe that the lower stock sales tax, which will be effective tomorrow, is going to be a game changer for the market. It may help improve volumes at the margins, but certainly not to the point that it would push the average daily value turnover to 7 billion or more. On the other hand, we are looking at the upcoming IPOs for a boost in liquidity. Speaking of which, let's discuss the three that have been in the news recently. We believe that Mint will still push through, hopefully this year, but if not, by mid 2026 or before mid 2026. The other fintech, Maya, we believe might follow as soon as 2027. As you can see in this chart, the progression of Maya's profitability is quite similar to that of Mint's. It's probably 1 or 2 years behind, but it's really something that we're also looking forward to. So we're not just looking at Mint, but we believe that Maya is going to be a candidate for an IPO as well in the not too distant future. Maynilad, meanwhile, we like the stock and we're likely to recommend it, especially if the IPO is priced at between 14 to 15, hopefully at the bottom end of that range. On Han, we would be neutral, likely, unless the price drops by quite a good margin, by more than 50%, in fact. Meanwhile, there might be a mini boom in IPOs given the appointment of ex-PSE President Lim, who's the new SEC chair. We view this as quite a significant positive for the market. It will probably help a lot that he was the former chief of the PSE. Nevertheless, despite the appointment of Attorney Lim, we believe that incentives are needed to encourage many more companies to go public. And then this is something, if you follow me on Twitter, if you follow the MyTrade account on Twitter, you may have seen this trivia that I posted earlier today. Just taking a break from the fundamentals now. So just to read through this, the biggest cohort of companies in the PSE today went public in the 1990s. Of these, one stands head and shoulders above the rest. Had you subscribed to 1,000 pesos worth of shares during its IPO, remember that this was in the 1990s now. Of course, 1,000 pesos was a good deal of money even back then, but still within the affordability levels now for someone who was working in the corporate world at the time. So if you had bought or subscribed to 1,000 pesos worth of shares during its IPO and kept all of the stock dividends, the total value of those shares, including the dividends, would be nearly 500,000 pesos today. That is why we are quite positive on some of the IPOs now coming up. You would have also received almost 15 pesos in cash dividends in the past year. So which one is it? Now it's ICTSI. This chart is on a log scale. So just to make it more friendly to the eyes in terms of the presentation. So you can see the value of 1,000 pesos worth of ICT shares at the IPO would be worth about 495,000 pesos today. If you want to take a screenshot, these are the calculations on how we came up with those figures. And then if you're interested, you can see that Philippine 7 is actually the second best performing IPO stock of the 1990s, followed by Jollibee, Meralco, and then GSMI. Okay, so moving back to fundamentals. We're now moving to our stock picks, but we wanted to show our screening criteria first. So these are the three. We have 5. So as usual, we're looking for historically cheap stocks, meaning they are at least 1.5 standard deviations below their long-term mean forward PE. We also looked for stocks that have relatively low or at least just moderate correlation to foreign flows. We showed the other chart before, no, during the January market briefing. We showed which stocks have an inverse, moderate to strong inverse correlation to the BSP's policy rate. We also looked for companies that have positive EPS growth over the next 2 years and companies that saw increasing dividends over the past year. So just to summarize everything in easy to read graphic, you can see the companies here that we considered now. So there has been a major turnover in our stock picks. We basically replaced, if I recall, 70% of our stock picks at the beginning of the year, given all of the volatility that has happened because of the recalibrations that have been forced because of Trump's policies, and then of course the Iran-Israel conflict. So based on this table, we chose 6 that met at least 4 of the 5 screening criteria. Of those 6, there are 3 that actually met all 5 screening criteria, and these are Jollibee, SM, and SM Prime. We added 2 that met 3 of the 4 screening criteria. These 2 we measured against only 4 criteria because the 5th is not applicable. No? So these are, sorry. Added only 1 pala that meets 3 of the 4 because Converge was not listed long enough to calculate the inverse correlation to the BSP policy rate. And then we added event-driven cases like SPNEC and RCR. In any case, our stock picks are Ali, BPI, Converge, ICT, JFC, Manila Water, SM, and SM Prime. So just to explain a little bit on each one. Sorry. I think I have a slide missing now. Sorry. Sorry about that. But in any case, we like, for example, Jollibee. Despite the fact that the minimum wage was increased just today by the NCR Wage Board, which will affect the company's margins, specifically in NCR and most likely in the greater Manila area, which includes Region 4A and possibly even Region 3, which will probably follow suit with wage hikes on their own. Our view is that significant increases in minimum wages are actually a net positive for Jollibee. The marginal propensity to consume among the lower income brackets is quite high, and this should more than offset the higher costs on the labor front for Jollibee. For SM and SM Prime, these are 2 of these 2 are still proxy plays for the market when the market turns, and we do still expect that when the market turns, SM and SM Prime should be among the leaders. On Manila Water, it will benefit from Maynilad's IPO, which is now expected in October. It was also disclosed this morning that Manila Water will take over the project of Prime Infra, which is the Wawa Dam project. They'll take over the bulk water contract of Prime Infra, and according to the disclosure, it will be financially accretive to the company. Now, we like ICTSI despite the fact that it is often referred to or often mentioned as one of the companies that is vulnerable to Trump's tariffs, but we believe that the company's wide geographical base should be more than enough to offset that. Also, it met 4 of the 5 criteria that we mentioned. On Converge, we like the prospects for the company still moving forward. We still see a lot of runway for growth. On BPI, what we like is the fact that it is continuing to increase the share coming from the consumer portfolio, meaning that its net interest margin will probably be the one that's most resilient among the banks in the face of the BSP's rate cuts. And then Ali, of course, we believe that the property market, residential and office, will turn over the next 12 months, and Ali will be at the forefront of that one. We also recommend, apart from our stock picks now, might be a good idea to consider what we call a Trump-proof portfolio. So in this case, these stocks have zero or minimal foreign operations or exports. We believe that they will be resilient to a slower economy and supply chain disruptions from tariffs. These companies also have a positive outlook over a 2 to 3 year period, not just over 12 months, which is the basis for a top 10 picks. And then you can see here that the weighted average PE of this portfolio is 7.4 times only. That's more than 25% cheaper than the market as a whole. On an EV to EBITDA basis, it's quite similar now at 5.6 times, which is a 25% discount to the market as a whole. The 2-year EPS CAGR is also better, and the yield is also significantly better, even though Cebu Pacific has a yield of 0. So our recommendation is probably to allocate a good chunk of your portfolio into these 6 stocks now, maybe 20%, 25% of your overall portfolio. So just to summarize, again, Trump's outsized influence on the markets has been quite destabilizing, has caused significant or high degrees of uncertainty and volatility. We believe that foreign investors are likely to stay away, and this will keep the PSEI's valuations near historic lows. Earnings, meanwhile, this year will probably remain tepid, and we downgraded, therefore, our 2025 year-end physics target to 6,900. However, the earnings picture brightens into 2026 and 2027, and then our revised list of top picks are designed to outperform over the next 12 months. But again, we believe it's best to complement it with our Trump-proof portfolio. So we are overweight on consumer, REITs, renewable energy, and conglomerates. We are neutral on most other sectors, and we are only underweight on legacy energy. This reflects really the low valuations of the market. There's really not a lot of areas that we would be negative on, given how low valuations already are. So, sorry, one more slide. Just an appendix with regard to the upcoming PSE index review. Based on our calculations, Uh, and if the current rules are maintained, the only change that we expect in the index is that plus will take the place of bloom. However, if the new or proposed rules um, are put into effect for the current index review period, then China Bank and SMC will likely get deleted on liquidity, and then Bloom will very likely get booted as well because of the market cap threshold. And with that, Aboitiz Power will return to the index, and then Plus and RCR will be new members. We, based on historical um, precedents, no? The expected announcement dates are July 25 and August 1. If it comes later than August 1, then I think that the odds that the new index rules will be implemented go up significantly. Now, and then just to remind everyone, the average returns for those that were added to the index over the past decade or so was negative 7.2% after 3 months, negative 7.3% at 6 months, and negative 11.3% after 1 year. Deletions, on the other hand, were generally positive, average returns of 3.5% after 3 months, plus 9.2% at 6 months, and then plus 11.6% after 1 year. So it is a good strategy overall, based on historical data, to sell the additions after the effectivity and then to buy the deletions after effectivity. Um, and then just a quick note on the table here, we tabulated the total funds under management of the equity focused ETFs or UITFs, and we found that about 92 billion pesos of assets under management are under index ETFs or as this ETFs that try to mimic the returns of the index. So given the estimated weight of plus, which is at 2%, the potential inflows for the stock from local funds alone will be about 1.84 billion. Given the price of plus last Friday, this will require 32.4 million shares, which is about 6 days, sorry, 5.4 days worth of trades based on the 1 month average. So that's it for our market outlook. I turn you back over to Cadiz.
All right. Thank you so much, Sir Nicky, for that detailed and insightful presentation. There was a lot to take note of, and I hope everyone was also able to take note of their key takeaways. If not, don't worry, you will get a chance to do a replay later on. But I'm sure these insights will be especially helpful for everyone as we prepare for the next half of the year. Now, I've been seeing some interesting questions come in, even while the presentations were ongoing. So at this point, I'd like to invite Sir Lawrence back on the stage, and Sir Nikki, please, as we move into our Q&A segment. Okay. Hi, Sir Lawrence. Hi, Sir Nikki. So we are going to move into the Q&A section in just a bit, but let me just encourage those who have just currently joined us. So if you're new here, please, you're very much welcome. Send in your questions here at our comment section below, and we'll try to get through as many of your questions as we can. With that, let's dive into the Q&A, and let's select the first lucky question. All right. Let me just sort through the questions here. Okay, let's start with this one. This is mostly fundamental, Sir Nikki. So, will the BSP rate cuts be enough to trigger investors from fixed income to equities? If not, what could possibly trigger it?
Thank you for the question. Historically speaking, um, the amount of rate cuts that we have seen should have actually triggered um, reactions already. At least a little bit or a trickle from fixed income into equities. I think what's really keeping local funds from rotating into equities is really, again, the influence of Trump. There's really a lot of volatility, a lot of uncertainty. Um, he really impacts a lot of decision making uh, on the corporate side of things now. The C suites executives are probably keeping a close tab on all of the actions emanating from the White House now. So we do expect further rate cuts for the balance of the year. Hopefully, that will finally trigger a little bit of rotation. But what would really help is if there's significantly more clarity with regard to policies coming from the White House. Maybe if there will be major trade deals, trade agreements that will be announced over the next 3 to 6 months, then we will see a lot more um, inflows into the market.
All right, thank you for that, Sir Nikki. And let's move on to the next question. Okay, which among the picks should I add if I'm focused on a dividend port?
Um, Let me just go back to my slides now. Let me just a moment. Within our stock, within our stock picks, there are only a few that have really high yields now. Or actually, there are only a few that have moderately high dividend yields, and Manila Water is one. However, as I mentioned here, most of the stocks that were in the table that I showed earlier um, saw improvements or even significant improvements in their dividends over the past 12 months compared to the previous 12 months. So even though their dividend yields are not high per se, at least you have assurance that they increased their dividends over the past 12 months. And we believe that there is significantly um, good chances for their dividends to continue to increase. Now, let me give a few examples. Converge, for one, just instituted its dividend over the last 12 months, and we believe that its payout ratio will increase significantly because there's really not a lot of capex left for the company. SM and SM Prime, they increased their dividends significantly. Given the trajectory of inflation, which will benefit malls and their retail businesses, we believe that SM and SM Prime will continue to increase dividends. Um, ICTSI has consistently increased dividends as well. Um, Jollibee is also one of those. So these may not necessarily be, again, these may not be necessarily high yielding stocks, but the prospects for improvements are there now for actually all of them.
All right. Thank you for that insight, Sir Nicky. I have an interesting series of questions here from Memento Ne. So I'm going to go through them in sequence because I think that would make the most sense for his question. But please take note of what he's asking. So he said most of the top recommended stocks, JFC, SM, SMPH, based on fundamental criteria and are not heavily dividend paying stocks. Is it because we are prioritizing capital appreciation or growth of the price? That's number one. And then second is he said that the eight stocks that had color, does the dark yellow mean invest more allocation versus the light yellow ones, which are the other five stocks? And then finally, he said, is there a combination of both technical and fundamentals that both are also recommended by both presentation of Sir Lawrence and Sir Nicky? He identified Ali, MWC, ICT, SM, SMPH. Are these correct? Now, maybe we can pick out the, the questions one by one and just let me know who would like to take the first bat at the series of questions, sir.
Sige, let's answer in sequence now.
All right.
Can you
Sige,
go
let's
back to the first
show the
question?
first. Okay. Here.
And then can you put back up my presentation? Sorry.
Sure,
Just to
sir.
answer the next two questions. That's just to answer those.
Okay. This one, sir?
There. Yeah.
All right.
So most of the top recommended stocks based on funda criteria. Sorry, what's the question again? The first one are not heavily dividend paying stocks. Is it because you're prioritizing capital appreciation? Okay. So to answer that question, I think it's important to make a distinction between um, the top picks for a given period and um, a dividend portfolio or a yield portfolio. I think for me, those things need to be separate. I think you should leave money aside for stocks that have high dividend yields. But if you are relatively young, I think that the primary goal would probably be capital appreciation. So you're correct that these top picks are more about capital appreciation rather than yield. And then let's go to the next question. Okay. The darker green shaded names, no? Sorry, darker gold shaded names, no? Jollibee, SM, and SM Prime. That's only because they meet 5 out of 5 screening criteria. The ones that are in the lighter shade of gold, these are our stock picks that met either 4 of the 5 screening criteria or 3 of the 4 screening criteria. And as we explained earlier, for Converge, we only considered 4 screening criteria because it doesn't have a long enough history to calculate the inverse correlation or correlation of the share price to the BSP's uh, rate setting cycle. You would probably have to have gone, or a stock should have gone through at least the entire rate setting cycle now, both up and down, before we can calculate the inverse correlation. And that is why we also have not applicable for AREIT and not applicable for Monde there. So that's the only reason really for having different shades of yellow or gold in this table. And then I think Lawrence can take the third one, and then you can drop the slides already.
All right. So let me
Thank you.
just remove the slides. Okay. And Sir Lawrence, here's the final question. He asked, are Ali, MWC, ICT, SM, and SMPH, something that we recommend technically as well. And then if you can provide some good entry points, if ever.
Yes, for Ali, I think the entry point would be around 2410. That's where the stock broke out recently before its recent run up to the 200-day moving average line. Then for MWC, as we mentioned earlier, the uptrend is still intact, and we can probably see MWC moving further higher. For ICT, it's just in a trading range with resistance. Let's see, with resist near 427, 428. SM resistance at around 915, and SM Prime, probably it's a buy closer to 2270.
All right. Thank you for that, Sir Lawrence. I hope we were able to answer your questions, Memento Ne. And let me move on to the next question. I have a question here from Bradley Lim. What are the chances of SubCP paying dividends soon?
Okay, thank you for the question. Uh, I think based on what management has said, there's still not enough retained earnings at the moment for SubCP to pay dividends. Also, given that the first quarter earnings performance was disappointing, um, then prospects for the payment of dividends this year is probably quite low, and investors and holders of SubCP will probably have to wait until at least next year. Um, but having said that, if you already own SubCP, I think it's advisable to hold on to the shares because you really don't know. We really have no way to predict what management will do over, say, the next 6 months or 12 months. And it's better to stay invested, keep the shares, given that there's you already have a lot of potential return uh, from SubCP once those dividends are um, paid out. No? So all of the cumulative dividends or all of the dividends in arrears will be paid out at one time. So just hold on to SubCP.
All right. Thank you for that, Sir Nicky. But say I don't have SubCP yet. Can I hear from Sir Lawrence? What's a good entry point for SubCP?
Well, the entry price would be somewhere slightly below 38. It will not fall far below 38, I think. Probably a good entry point would be 36 to 37 something.
36 to 37. Sorry. I asked because it's included in our Trump proof portfolio. So maybe there are clients who are interested in adding SEPCP. All
Hmm.
right. So let's move on to the next question. Here, this is interesting. Why recently Plus has been significantly underperforming Bloom? And maybe we can have Sir Nikki answer first, and then Sir Lawrence have a look at the charts for both. Ah, Sir Nikki, I think you're on mute.
Sorry about that. So as I was saying, it's really because DigiPlus was on such a um, huge upward trajectory in the previous few months, no, and so that really made it vulnerable to a significant correction. At the same time, while that was happening, there was news on two fronts for Bloom. One was that the company um, launched its online gaming platform, so there was lot of hope and hype with respect to that. And then there was also speculation that Bloom would be retained in the index as long as it met a certain volume weighted average price by the end of the review period, which is today. Today is the last day of the next index review period. Um, so those are the two reasons that why Plus has underperformed recently. But if you look at the longer term chart, it's really much more in favor of Plus, and I think that's what you should be looking at. Adis, ikaw naman yata
See,
nag
I'm the one naman. I'm the one on mute naman ngayon. Okay, so I'm back. Sir Lawrence, maybe we can hear from you technical wise. How does Plus and Bloom look like?
Plus peaked recently at 65.30 and it has pulled back, dropping below the 10-day moving average line close to 60. And it's currently on a move down to the 50-day moving average line, probably, which is at 49.35. As for Bloom, although it peaked recently at uh, 653, it has come down also. I think, uh, yeah, as Nikki mentioned, it was due to the speculation of various events taking place. We should see some more clarity in the coming days or weeks. I would expect Plus to find support eventually somewhere, then make a bounce. As I recall, China Bank was trading at around 60 plus. Then on the last day of the adjustment, it jumped to a high of 93. So I think the expected direction for plus should still be upwards.
If, for example, I don't have Plus yet, should I take this opportunity to add it to my portfolio?
Probably look at 50, sorry, probably
Go
look at
ahead.
around 50 pesos. That's a round figure. If it drops below 50, I think 48 something should be a solid support for plus. And
All right. How about Sir Nikki?
Oh, yeah, as I mentioned earlier, there's going to be a lot of inflows into Plus coming from local funds that are really based on, or the aim of these funds is really to mimic the performance of the index. So these are the index funds. These are the funds that are really benchmarked against the PSEI. And with that many flows, um, the stock can really go much higher from current levels. No? And I agree with Lawrence that probably 50 probably is a good place to a good level to accumulate the stock.
All right, sir. Just as a follow up from Ken, he said, sorry regarding to Plus underperformance, not attributing to fear of cannibalization or government stricter regulation? Question mark.
Uh, there's also that, no, but uh, remember that Bloom rallied at least a significant portion of that rally for Bloom came from the hope and the hype surrounding the online gaming business. So you can't have one stock that is going down because of perceived regulation for the industry, and then have another stock that's going up because it is entering that same industry. No? So that would be inconsistent. Of course, there's that fear, and maybe some small corner of the market is apprehensive about that. No, but uh, this is a public. No, this is a public presentation. No, but we all know that there are certain personalities that are heavily invested in the industry, and it really wouldn't be to their benefit uh, to have um, significantly higher, stricter regulation with regard to these entities. So I don't think that this. I don't think that initiatives uh, will be I don't think initiatives in this regard will prosper. No?
All right. Thank you for those insights, Sir Nicky. And now let me just ask the team's help to pull up the next question. I have here from Chabert Nang. If you will choose only one stock to buy now, to one stock to buy tomorrow with strong conviction, what is that stock? Maybe we can have a pick from Sir Lawrence and then Sir Nicky afterwards. Sir Lawrence, if you could buy one stock to buy tomorrow with strong conviction, what is that stock?
I like stocks with limited downside. I think I'll go for ASEN.
ASEN. Okay. And then what's a good entry point right now, sir?
Current
Whatever.
price is okay, or if you can get it closer to 250, even better.
All right. There you go, Trevor. How about Sir Nicky?
Uh, without without any given time horizon, um, I'd have to no, I'd have to qualify. Therefore, if you're looking for something in the short term, then uh, plus would be uh, one of one of the stocks that would really be top of mind right now, because really I think there's very little chance that it will not be added to the index. No? So with that index play in mind, and with the announcement possibly coming as soon as July 25, which is less than 4 weeks from now, then that's really something that I would bet on, especially since the stock has um, corrected quite significantly already. On the other hand, if I had to choose one stock that is for the long term, I would go for SM Prime. SM Prime is really down there when it comes to where it is in terms of its historical PE range. The value also of the reclamation project has been priced out of the stock. Um, the market is really valuing the company right now just on the existing business, um, and not even valuing the existing business where it should be. So all of the value from the reclamation project will come to the fore over the next 2 to 3 years. I think there was a interview with, I'm not sure if it was Henry C. Jr. or if it was Mr. Hans, uh, who mentioned that they will be selling lots from the reclamation project, and they may do so as soon as. He didn't say this, no, but in our view, given the timeline, no, given the timeline of the project development, given the timeline of the awarding of the land titles for the reclamation area. The lot sales coming from the reclamation project could begin as soon as 2027. So if you're looking for something that's over the longer term, SM Prime would be again one of the few stocks would be a top of mind for me.
All right, there we go, Chaparrot. I hope you were able to pick up some stocks that you can add to your portfolio. On to the next question. I have a question here from Financial Freedom by Mokong Boy. How will you play Espinek? Will you buy now and slowly tranche out when disclosures of M Green gets published? Or is it a hold until PSEI inclusion, similar to what happened with ASIN?
Okay, thank you for that question. I really like Mokong Boy's posts on Twitter. No? So just a little bit of a shout out for Mokong Boy. Thank you for the question. And I actually have an appendix for Espinek as well in the presentation. Kadis, if you can bring that up again, let's go to the second to the last slide
Sure.
before the Q&A slide.
This one, sir?
Yeah. And then that one. There.
This one. Okay.
Yeah. I added that at the last minute now because I was expecting a question regarding Espinek. Now, a few days ago, there was this social media post from Solar Philippines on Facebook, and they broke down the divestments of Mr. Leviste with regard to his Espinek shares. Now, the divestments were really quite specific with regard to the shares that were sold to Meralco MGen, and there were 3 tranches for that one. There was also a tranche that was labeled as public. So right now, Leviste has 8.16 billion shares remaining, and the expected proceeds from that 8.16 billion shares is 13.5 billion. So these numbers are all in the social media post, or you can easily derive the numbers for yourselves. But if you divide the 13.5 billion by 8.16 billion, the expected sale price for the balance of his shares is 166 or about 165. That would tally with the total shares that he had at some point, which is 24.6 billion. And that tallies with the expected proceeds that was in the social media post, which is 34 billion. So at some point in the not too distant future, definitely within the year, we expect the balance of the shares, 8.16 billion shares, to be disposed of. And this will be crossed at about 165 or 160 per share or 170 per share. Should not be far away from 165 or 166. And I think that will be a significant catalyst for the stock, together with the fact that operations for TerraSolar begin in February or March of next year. No? So for me, just accumulate at current levels and then hold on for the next 6 to 9 months. I think there will be significant catalysts for the stock moving forward.
All right. Thank you for that insight, Sir Nicky. How about Sir Lawrence? Would you be able to share like a possible entry point for Espinek if possible? Like, because Mokong Boy asked, will you buy now and slowly tranche it out?
There's solid support at 120. That should be a good enough entry level for me. As to the breakout point, if it can surpass 125, then I should be on alert for further move upwards. Eventually, I think this stock should go to around 140 plus.
If
Right.
I may add,
Yes, sir.
Kadis, sorry, I didn't answer the last part of the question pala.
Mhm.
With regard to the potential of Espinek for inclusion in the PSEI, I don't think that this will be in the near future. I don't think that it will happen at any point next year. I think that the share price has to be above, at least above 2 pesos or even 2.25 per share for the stock to have any chance at inclusion in the index.
Thank you for that, Sir Nicky. Now let's move on to the next question from Marian Berretina. Sir Lawrence, do you see another possible breakout for LC? Any catalysts on the horizon that might drive it, Sir Nicky?
Me first. Okay. Um, if the company continues to report good earnings, no, that should help assuage some of the fears regarding the stock. Remember that the company's mine site Victoria actually has an expired MPSA. They're just being allowed to continue mining while the renewal is being processed. No? But really, anytime operations could stop again because they don't really have a valid MPSA at the moment. So I think that's the one that has to happen first. They need to get that um, renewal. Unfortunately, they've been trying to renew that, I think, for more than 10 years already. I think it expired 2014, if I'm not mistaken. Really not sure about that. But it's really been quite some time since the MPSA expired. So that one first, before we look at the other potential catalysts for LC.
All right. How about Sir Lawrence? Is there
LC
another
has
possible breakout?
Yeah, LC has pulled back from 0.195 down to 0.139 today. We see support near 0.13. After that, there's another one at 0.11. But I think for now, 0.13 should be a good support for LC. As to a potential breakout, not in the immediate future, I think it needs time to digest its recent gains. It will probably go sideways for several weeks.
All right. Thank you for that, Sir Nicky and Sir Lawrence. Thank you for the question, Marian. Now, next question from Albert Uy. What is the outlook for banks in general? Thank you.
Hey, thank you for the question. I think two things to mention here. Quite recently, I think over the past few months, we've seen some slowdown in terms of lending growth for the banks. I think it peaked somewhere in the low double digits now in terms of loan growth for the banks. And then I think now it's back down to, I believe, 10%, even less than 9%. So there's that, no, a little bit of a slowdown. At the same time, after the brief period when interest rate cuts reduce the funding costs of banks, eventually they will all have to deal with lower net interest margins as loans are repriced. So the outlook, in our view, is generally neutral, and we would only be positive on a few banks. One of them would be BPI, which is one of our top picks. As I mentioned earlier, it's the one bank that we think that will be most resilient to the rate cutting cycle of the BSP. And in fact, it has actually outperformed the other banks already in terms of net interest margins. Most of the other banks have shown dips in their net interest margins in the last 1 or 2 quarters. BPIs has actually increased very slightly. So neutral in general, but we do find some potential in a few names.
All right, sir. So for those few names, Sir Nicky, which ones would be of interest right now at this point in time?
In BPI, the other one would be Union Bank, in our view. It's also similar to BPI. It's also growing its consumer business. I think also that earnings estimates on Bloomberg are quite conservative, and I think there's significant scope for earnings estimates to go up significantly from here on. I think some of the negativity came from the losses that were incurred by the digital bank. No, I think there was a rough period for Union Digital in 2023 and going into the early part of last year. But that is all behind Union Bank already, at least in our view. And we believe that the numbers will be quite positive moving forward. The only thing is the relative lack of liquidity now for Union Bank, and that is why we prefer BPI.
Right. Thank you for that, Sir Nicky. How about some technical insights from Sir Lawrence for BPI and UBP?
BPI today broke down below the 200-day moving average line, but we'll see tomorrow if it can snap back above 132.80, 133. Sometimes end of month or quarter end, we see this last second volatility coming in. Then for Union Bank, there's good support at around 32, but resistance at 34 and 35.
Right. Thank you for that, Sir Lawrence. And on to the next question from LB De La Cruz. What is the effect on RLC for its capital infusion to RCR?
Um, I wouldn't, first of all, I wouldn't really term it a capital infusion. It's more of really, uh, I would say, capital recycling rather than capital infusion. So, capital recycling means they're basically trying to realize the value of some of their malls by injecting it into RCR. And this would then have um, two, two results now. First is that they will have um, more flexibility in terms of where to put their additional funds. They can invest in higher yielding assets, for example, and at the same time, the effective tax rate of RLC would be reduced, I think, by a little bit. No? This is one of the reasons why RLC, Mega World, and Ayala Land will continue to infuse assets into their REITs. It's really partly a tax management exercise on their part. And on the other hand, the impact for RCR is that it will enlarge the market cap significantly. And this is one of the reasons why we are positive that uh, RCR will eventually follow in the footsteps of AREIT and be included in the index. So, huge positive. It's really more of a huge positive for RCR rather than RLC.
All right. Thank you for that, Sir Nicky. How about maybe some technical insights on RCR, Sir Lawrence, for those looking to add?
Probably closer to 720. That's where the 10-day moving average line is.
All right. Okay, so 720 for RCR. And another question from LB De La Cruz. How about gold stocks like APX, PX, and OGP?
Okay, let me tackle that, I guess, in reverse order. So first, OGP management has said that they expect the weather-related issues that forced that curtailed uh, the rate of mining and the output and throughput of the mine site. They said at the start of the year that it will continue to impact operations this year. So not really looking for a significant jump in production levels for OGP. Of course, there's the benefit from much higher gold prices, no? But I think that OGP would be um, much less of a choice for us uh, compared to Apex, for example. And then on Felix, I think that the price has run far ahead of where it should be. I think that the market has uh, priced in too much with regard to Silangan mine, which will open next year. Remember that the plant that they will open next year is what they call a starter plant only. So production level would be, I think, only about 10% or 15% of what the eventual long-term capacity will be. So the economies of scale um, with this level of output and level of mining would be quite low compared to what it will be in the future. So that means I think the mine will be far less profitable than what some investors are expecting. And then lastly on Apex, again, actually Apex is our top choice for the sector. However, it's not something that we considered for our top picks now because um, the MPSAs of Apex will expire, I think, in 4 or 5 years. They will have to go through the process of renewal like Lepanto. Um, and then also, forgot the other thing that I was going to say. But there's also, I think, really limited upside right now for Apex, especially since the fears with regard to Iran and Israel have subsided as well. Fears with regard to the tariffs have subsided. Over the longer term, I think the price for gold will still be supported by a weaker dollar. But um, again, I personally think that the upside to Apex and the whole gold space is actually quite limited, at least for the next 6 to 12 months.
All right, thank you for that, Sir Nikki. Maybe Sir Lawrence can shed some light on the technicals for these three.
The charts are not looking bullish right now. There's chance that it may continue to go sideways, even drift lower. As to Apex, there's support at 575 for the next one. As to Felix, we can probably see further correction if it breaks 626. Afterwards, support is at 561. As to OGP, it's currently consolidating. So among the three, surprisingly, it's actually OGP looking better than the other ones. But there's still uh, some downside risk if ever it breaks 1670, it has to break out above 1730 to continue with its rally. So
Right.
nothing imminent in the near term.
Thank you for that, Sir Lawrence. So on to the next question. We are down to our last few minutes for the Q&A segment. So make sure your questions are in. I have a question from Jerry Chua. What are your top renewable energy picks with growth and liquidity?
Okay, thank you for the question. We already mentioned Espinec as one of our top picks, and it's really event driven. Um, the only other RE that we are really looking at is CREC. There's been, I think, some delays with some of its projects. The number of projects that will be energized this year are fewer than what that we were previously expecting. But from 2026 onwards, the pace um, of projects that will come online will be quite large as well. No, the company's target is about 1 gigawatt per year. Uh, we haven't met with the company recently. We have to get updated, but I think they can, or I think it's within their capability to actually deliver on that 1 gigawatt promise per year now moving forward. No? So CREC is also one of the companies that we like right now. In alam of maybe the next few quarters will continue to be uh, tepid in terms of earnings growth. Investors who are looking at CREC, or for those who already own CREC, you will probably have to be patient and wait until next year.
All right. Thank you for that, Sir Nicky. Maybe we have some technical insights from Sir Lawrence on CREC.
Still in an uptrend. There's a recent breakout above 390, so the stock I think would generally be trending higher. Yan nga, liquidity is quite low, but overall chart pattern looks good.
All right. Thank you for that, Sir Lawrence. And move on to the next question. I have another question from Marian. Hi, Sir Lawrence and Sir Nikki. Can you share your thoughts on EEI? How its valuation compared to peers, and are there any big catalysts or risks coming up? Is it a good value play right now, or should we stay cautious given market volatility?
On this one, I'm sorry, but it's not a stock that's in our universe now. It's not a company that we are following right now, and so I'm not really in a position to give any relevant insights at the moment. Maybe Lawrence has something instead on the technical side.
The
All right.
next
Thank you for
support, yeah, the next support is at 265 if ever it breaks further below 290.
All right. Thank you for that, Sir Lawrence. And now I have a question from Albert Uy. Outlook for SecP, please.
Okay, on this one, I know that there was at least some improvement in terms of earnings, but uh, this is something that I would probably defer to our banking analyst. But Security Bank is not in our radar, so to speak. I think it still has um, some, or at most of its metrics are relatively weak compared to its peers, especially the big three. No, I think there was even an article on Bloomberg saying that it is one bank that could see um, potential capital calls now, meaning they might have to come to the market to raise capital to beef up its capital base. Um, so it's not something that's not really on our radar right now.
All right. How about the tactical outlook from Sir Lawrence on SecB?
60 to 61 support.
All right. Thank you for that. And we're actually down to our last question already from Ken. And before Sir Nicky and Sir Lawrence answers this, if in case you have questions that we weren't able to answer here, don't worry. We will take note and we will try to answer them through our communities. So please follow us in our social media and also join our MyTrade PH Facebook group, MyTrade Map. All right. So this is the last question from Ken. Are you confident Terra Solar could be far above break even? They seem getting bank loans for the massive amount of construction with very high interest rates.
Okay. On the interest rates, I'm not sure what you would call very high. The reason, or at least one of the reasons that Televiste sold out to Meralco actually was that so so that Terra Solar would be able to piggyback on the financial strength of Meralco, and this would then help Terra Solar get loans from banks that are cheaper than SPNEC would have otherwise had to take out on its own if they didn't sell out to Meralco. No? So I think that alone will probably save 150 basis points, 100 to 150 basis points in terms of interest rates for Terra Solar. Another thing to point out, one of SPNEC's earliest projects, no, Tarlac Solar, if you look at its history, you will see that the company bid for supply contract at only 3 pesos per kilowatt hour. And I haven't gotten updated, no, but at least in the very first year, full year of operations for Tarlac, or Solar Philippines Tarlac, that project was profitable even at 3 pesos per kilowatt hour. Now, given that utility scale solar projects all have similar funding structures now, meaning it's either 70% debt to equity or 75% to 25% debt to equity. No, so even if Solar Philippines Tarlac is much smaller compared to Terra Solar, given that there is a huge price differential, only 3 pesos for Solar Philippines Tarlac compared to 7 pesos per kilowatt hour on the power supply agreement between Terra Solar and Meralco, then there's that sea change in terms of profitability between Terra Solar and Solar Philippines Tarlac. So to answer the question, yes, we're very confident that Terra Solar will be well above break even. You probably wouldn't have seen Actis invest in Terra Solar at a valuation of $1.5 billion if they didn't see the profitability picture for Terra Solar. So I think the $1.5 billion equity valuation for um, Terra Solar coming from the Actis investment is a validation of what's this, the economics of that project.
All right. Thank you for that answer, Sir Nikki. And I believe that wraps up our last question. But before we officially close, can I ask Sir Lawrence and then Sir Nikki to share a few parting words? Sir Lawrence first.
Market is in a trading range, so what we do is to try to buy low and sell high. Unless we see a clear breakout of either direction, that's what we'll continue to do.
All right. Thank you for that, Sir Lawrence. And then Sir Nikki.
Okay, for me, this mid-year briefing is quite unusual now. We don't usually have significant turnover in terms of our top picks in the middle of the year. But we decided to recalibrate really quite significantly now. As I mentioned earlier, there was a 70%, I mean, even 80% turnover in our top picks. Not because our top picks at the start of the year were doing poorly. Actually, when you look at the simple average total return for our top picks at the start of the year, it's positive 2.3% compared to positive 0.3% for the PSEI. So actually, our top picks were outperforming by the end of the trading today now by 200 basis points. For some time, it was really underperforming, but it has caught up significantly in the past few weeks or month. But we decided really to, again, recalibrate quite significantly in the face of all that has been happening now in everything, everywhere, all at once. And so hopefully these stock picks, and not just hopefully, now we're confident that these stock picks will also outperform moving forward 6 to 12 months down the line. And I hope that everyone who attended today got something out of our discussions. Thank you.
All right. Thank you so much, Sir Nikki and Sir Lawrence, for your parting words. That sums up our presentations today very nicely. And once again, thank you very much, Sir Nikki and Sir Lawrence, for your time and your insights. We hope to see you again soon. Thank you.
Bye.
Thank you. Thank you, everyone.
All right. So that has been a very engaging and fruitful discussion with our research experts, hindi ba mga ka-MyTrade? But wait, we are not done just yet. Syempre, hindi kompleto ang ating mga MyTrade event kung wala tayong raffle. To thank everyone for staying with us until the end of this event, we're giving away some exclusive MyTrade PH merchandise through a quick raffle draw. So if you registered and stayed up until now, your name might just come up. So now, if you see your name on the screen, please take a screenshot and send it to us via our chat or our other social media channels. Our team is on standby and we will drop a link to our chat box so you can get in touch with us right after, lalo na kung isa kayo sa mga winners. All right, so let's do this, team. Let's take the roulette up on stage, please. Ilabas na natin ang ating wheel of names. And let's start the raffle draw. We will be drawing 5 winners. So let's start. Okay. Grabe, sobrang dami kong na-take note at hindi enough ang isang... wait, here, may winner na tayo. This is Earl Vinoya. Earl Vinoya, please remember to take a screenshot of the screen and send it to us with your details so we will be able to send you your prize. So our first winner, Earl Vinoya. Next, please. Let's do the next draw. Sino kaya ang ating lucky winner? Okay. Here we go. Joy Esmedia, our second winner for our raffle draw. Okay, Miss Joy, please take a screenshot and send this to us with your details so we can send your prizes to you. Next, please. All right, so this is the third lucky winner. And we have Kaiser Earl Delmo. So congratulations to the first 3 lucky winners. And again, Kaiser, please send a screenshot, take a screenshot of this page, and then send it to us via chat so we can send you your prize. And this is the fourth. Sino kaya ang mananalo? Fourth lucky winner. Here we go. Renny Embalzado. Congratulations. Please take a screenshot and send it to us with your details, and we will be happy to send you your prizes. All right. Congratulations, Renny. And this is our last lucky winner for the day. And who might it be? Let's see. Okay. Harold Ives Madriaga, congratulations! You just won yourself a bag of MyTrade merchandise. Congratulations, Harold. Take a screenshot and then send it to us, and we will be happy to share the prizes with you as soon as possible. All right. So again, congratulations to all our lucky winners. Don't forget to reach out to us through our social media channels or through the link sent by our team in the comment section below to claim your prize. And I guess that brings us to the end of today's session. And we hope you found the insights helpful and the discussions meaningful so that you will be well guided for the rest of 2025. And if you're here joining us for the first time, well, that's how we do it here at MyTrade. Engaging, insightful, and just the right mix of fun and fundamentals. Now, ito na, I'm gonna do my social plugs, you guys. So don't forget to stay connected with us. Follow us on Facebook, Twitter, Instagram, LinkedIn, and at MyTradePH for more updates and content like this. You can also subscribe to our YouTube channel at MyTradePH so you never miss out on videos, tutorials, and the fun stuff about the stock market. Or if you're more of a podcast person, we actually do have a Spotify channel also. Tune in to MyTrade Unplugged on Spotify, where we break down the market with insights from some of the industry's best. And that's a wrap for my social plugs. But then again, if you're not yet a MyTrade client, please feel free to register at start.mytrade.com.ph so we can be more connected and you'll be able to see our exclusive content and reports that will guide you through your stock market journey. So si Sir Nicky and si Sir Lawrence, you will be able to see them right in your inboxes if you are a MyTrade client. And thank you once again for joining us today, mga ka-MyTrade. Once again, this is Cadiz Hispano. And until next time, keep learning, keep investing, and as always, let your better tomorrow start with MyTrade. Bye, guys!